All right, welcome back here to Trader Minute. Great to have you aboard. I want to jump on here, talk about some of the issues in the market, what to do about them, and respond to some question or a question that came in about Meta, and talk about it in this context. Because right now in the market there are a lot of issues, and I have a list here, but it is in no way comprehensive. But we have Israel, Hamas, and what is going on there, Russia, Ukraine, and both situations are very complex in a number of ways that involve many countries around the world. And we are talking about escalations right now in both arenas, and some escalations where you could make some pretty dire predictions about what is going to happen. You combine that with inflation and the data that we got this week suggesting that inflation is nowhere near gone and is here to stay. You have central banks talking and having different policies, whether you're talking Japan or the ECB or the United States. There's still some central bank uncertainty. Go take a look at what happened to the price of gold here overnight. It doesn't move like that without central banks starting to buy gold. And typically they start to buy like that when they're worried about what's going to happen. So that does create some more uncertainty out there. You have a lot of different countries going into economic recessions. Some estimate that it's about 45 countries right now that are in economic recessions, which is a lot. Then we have earnings season coming here for the markets. And that's, not even talking about some of the politics that are going on here in the U.S. with the House and, some unprecedented stuff that's going on ahead of next year's election. So there are a lot of issues for this market to tackle, a lot of complex issues where we can't go out and say, hey, this is what the issue is, this is how it will play out. We don't have enough information. We don't have enough data. And these are very fluid, ongoing situations that, have a lot of interconnectedness to them. So what do we do? As traders, as investors, what do? We can't sit and wait for this magic bullet in the market, right? A lot of times people will sit and say, well, I'm going to wait until the Fed speaks, because when the Fed speaks, then I will know exactly what to do. It doesn't happen that way. It doesn't work that way. The market is an aggregate of events that unfold in real time. And when one event unfolds, there's always another one upcoming. And when that event happens, there's another event upcoming. It is a process of never-ending events. That is the market. It always has been that way, and it will continue to be that way. So, when we look at this list of issues, there could be a new one that unfolds in 5 minutes. We can't see what new issues are going to come and what are going to happen. And this frustrates many traders in the market. It's why many traders ultimately lose, is they get so wrapped up into all the issues and so wrapped up into trying to understand the intricacies of it. And they say, well, if I understood a little bit more about inflation or Israel, Hamas, and how this is going to play out, maybe I'd know a little bit more. They go and they do all this research, all their homework on it, and they come up with a theory, and then it doesn't play out that way, and they're frustrated. So what do you do in times like this? Which I would argue this isn't that different of a time. Right? Yes, the issues are different, but the fact that there's a million issues for the market, that's not different. That isn't changed. So what do? Well, let's go take a look at Meta. Let's go take a look here at Meta Platforms. And the question came in saying, hey, what do you think about Meta? Basically listed a whole bunch of questions about earnings, option pricing, and then what is it going to do in the context of what is happening in the broader market. So let's just kind of break down the analysis here on Meta. When we have a million things going on out there, the thing that we have to do is understand what we control, okay? We control how much money we put into a trade and what the reward to risk ratio is. That's it. That's all we control. We can't control whether the stock's going to go up or down. We can't control what the news is going to be. We can't control what analysts are going to say. We cannot control any other factors except for how much exposure we put on and what our reward to risk ratio is. And so we have to look and we have to say, hey, you know what? Does this warrant some exposure? Does this warrant a good, or does this have a good reward to risk ratio? So if I wanted to go buy Meta right now and say, hey, you know, and I'm not, okay, I'm not buying it. But if I wanted to use this $8 pullback to say, hey, you know, let me go and buy it. Okay, let me start with what I control. Okay, my exposure. Okay, let's just talk in the framework of the challenge. The challenge is about $3,000 right now. What would my exposure be? It'd be around $1,200 to $1,400 depending on the option. Okay, is that exposure going to kill me? No. Right? Is it, you know, something that is very normalized for me? Sure. Okay, great. Easy enough. That's in the system. That's in my trade plan. So that's not influenced by the rest of the market. Okay, that's not influenced by all the other question marks that are out there. That's a very normalized, very consistent thing. So very easy to repeat. Okay. Exposure, what I can control, done, check. Okay, I can get into Meta and have my exposure. Well, what about my reward to risk ratio? Okay, well, let's go take a look at the option pricing. Okay, let's transfer over here to Thinkorswim, and let's just come in and look at some of the option prices here for Meta. And there we go. And let's come in and say, give ourselves 21 days. Let's look around the money here and we can see, hey, you know, 315 options going for $17. $17. Well, okay. $17. That's really high. That's really high. Why? Well, because earnings are priced in here. Okay. If we go look at an option where earnings aren't priced in, we look at next week's option, that same option is only $5.50. Right? It's $12 more to get earnings, you know, in play here. Okay. All right. Well, let's just take a look at next week's options and let's just go into the money. Okay. Let's just look at these 300s that expire next week. Okay. They're going for about $18. All right, about $18 here. Okay, what's my reward potential? Well, my reward potential is, and let's come back here to the chart, my reward potential, if the stock goes back up to 330, it's going, and I'm just going to do the math real quick here, it's going to be about $10 to $12. So my reward potential, if Meta comes back up to these highs, is about $10-12 or about 60 to 70%. What's my risk factor? Well, my risk factor, I don't know. Where do I put my stop? What level makes any sort of sense to put my stop? That's the problem with something like buying Meta here today. Once it broke yesterday's lows this morning, and I made this comment on this morning's video, you don't have a good stop area. You don't have a good place to say, hey, you know what? I'm going to put my stop here. And so far, we haven't seen any good volume. We haven't seen anything that would suggest that a stop level is warranted at that, at that point. Okay, so if we come into the hourly chart, we can see we're still in kind of some free fall mode, and we don't really have a good stop point anywhere. All right, maybe we can say somewhere around 308, but from just a charting standpoint, we don't really have anything that makes a lot of sense. Yeah, would we likely find buyers in the 306, 308 level? Sure, but does that give me a good stop level? Not necessarily, okay? And so when I look at Meta, I go, okay, my reward potential isn't all that great, and my risk factor here is uncertain and unknown. Does that warrant me putting some exposure? And that's a really easy answer for me. The answer is hell no. I don't need to break down all these other issues. I don't need to understand inflation or, what the central banks are doing or the earnings or, what happened to the price of tea in China last night to look at Meta and say, right now, it doesn't make much sense for me to get in on a call or a put side. I don't have a good stop level if I buy puts. I don't have a good stop level if I buy calls. So why am I going to get in? Why would I even consider it? All I'm doing is flipping a coin or guessing with an option that's overpriced and overvalued that doesn't have a good reward to risk ratio. So Meta just completely goes off my my radar. It completely goes off my my looking to enter unless it gets to a point or does something that gives me some sort of risk reward. Okay, let's go to the XHB. All right, this is the home builder index, and we didn't have a signal on the home builder index yesterday, but we did have a signal on some of the housing stocks like Dr. Horton and Pulte Homes, right? Where we saw some bearish signals come into these stocks. And Pulte Homes, could I have bought puts on it yesterday? Sure, I could have. But why would I not? And what am I looking at here today? Well, let's ignore all these myriad of issues, right? I mean, is Russia, Ukraine, or Israel, Hamas, or inflation, or central banks, are these factors going to affect the stock? Sure they are, right? Can I quantify how much they're going to affect the stock today, tomorrow, and make some sort of crystal ball prediction? No, I'm not that, arrogant to assume that I can, predict the future when I don't have the data. So I go back to what I can control: risk, reward, and exposure. And so yesterday I have a signal that suggests that the odds are in my favor that the stock goes lower. But what happened? Well, the stock moved into a severely short-term oversold position, okay? If we look at the hourly chart, we can see kind of how oversold this became. This thing went from 75.50 down to 71. It took that big a move to create my signal. Okay. All right. Where do I put my stop? Does a stop right here in the middle of that move make any sense? No, it doesn't. It doesn't make a good stop level. So bottom line is, my reward potential goes lower as this becomes oversold, and my risk factor becomes higher and less sensible. So what do I need to do? I need to wait. I need to give this some time to play out. Let it consolidate a little bit. Then I can get better risk reward factors. I can more easily identify a good stop level, and I get a better reward potential, because a stock that makes a move like it did yesterday, the chances of it having 2 or 3 more of those days tied onto it is much lower than having 2 or 3 consolidation days tied to it. And I'm trading options. With stocks, maybe I don't care because I have time, but with options, I'm just going to get caught up in time decay. right? In fact, if we come and we look at these options, and these options here on Pulte, PHM, okay, let's just take a look at what they've done. Okay, and this isn't super highly traded on the weeklies, so yeah, we're not going to get a huge good look here at what they've done. But overall, we are looking at these options having gone down 20 to 25% on this pretty nominal, meaningless bounce here in the stock. Is that something I want to risk? Is that something that I want to, jump into and say, hey, let's go and chase? The answer is no. So I'll give it some time, let it play out, let it set its consolidation range. And when it breaks that consolidation range, I get a good chance to get in with a pretty defined stop. Or if it gets to one of the extremes of that consolidation range, okay, I can get in using the stop. But I just simplify. I quit trying to analyze all of these millions of factors that are out there, which are fun. Like, I love looking at them. I love understanding them and breaking them down. But when it comes to actually making money, and getting involved in the market in a way where we can put the odds in our favor and not just sit there and be guessing on all the different news and making up opinions, we have to go back to the factors we control, which are exposure and risk and reward potential. And we get the risk reward potential via the chart. We get the exposure level via our method. And that is why we trade the challenge with the algorithm that gives us good reward to risk ratios. It's the only way we can survive, right? I mean, just look at the trades we've made so far this challenge, right? If we come in to just look at this trade bank, yeah, we're at 3,000. We haven't made anything. We really haven't lost anything. But let's just look at the trades. We've made money on one trade out of 5, right? Most people say, that's terrible. I'm a grumble. Yeah, I get it, right? So do I. But let's take a look at what happened with each trade. Starbucks got hit with a downgrade. AMD got hit with some really bad news. Caterpillar got hit with a downgrade. Amazon got hit with the Fed. Meta, it got hit with the jobs report that drove the market down 30 points right on the day after we got in the trade and sent the stock down $4 right away. Every single trade's been hit with some bad news that we could not predict. We could not say, well, this analyst was going to say that, or that analyst was going to say this, or the Fed was going to do this, or the jobs report was going to come in like this. We didn't have any of that. We don't have that crystal ball. But we do have reward to risk ratios. We have stop points that control it so that when we have a winner, okay, Meta won for us, okay, great. It can counteract a lot of losers. And what does this mean? This means that if we have a little bit of good luck in our favor, right? Then we put 2-3 good trades together, we can make way more than we are going to lose with a couple trades going against us. And that is where most traders are missing the boat. Most option traders and 95% of option traders lose simply because they need one trade, or one bad trade will wipe out 4 or 5 good trades. But when we control our exposure and our reward to risk ratio in a proper way, one good trade can wipe out, I'm not going to call them bad trades because they were great setups. They were great setups and setups that traditionally have worked and that will work again. And similar setup to what we used for the trade that did work. But we have other things unfolding in the market that we cannot predict, that we cannot say, hey, these are going to, be the factor tomorrow or the next day. And then, the next day it's going to be this and this is going to how it's play out. We don't have a crystal ball that can show, those various things. So we simplify. reward, risk, and exposure. And that's what we do here at Trader Minute through the challenge. And that is what has led to our success over time. And yes, it doesn't lead to success in every single trade, but it does lead to continued success over time. Thanks for joining us here today. Have yourselves a fantastic day, and we will talk to you later. Take care.